Alrighty, everyone. We're going live here. I'm just going to wait 2 seconds here. We are going live. Today is August 13th, 2021, and it's a bit of a slower week, I would say. I don't know where you are in the world today, but here in lovely Vancouver, it is extremely smoky. So, once again, a hot day, kind of like, I guess, 2 weeks ago. Today we're going to talk about what happened in the market this week, as we always do. But just a word of advice, if you are new to trading, summer I find is one of the worst times to decide to go all into anything. And that's just because the volatility historically during the summer is really, really low. And this is something that I've talked about on the show before about, using the low VIX to potentially hedge against future upcoming volatility. But as we kind of see in August, as people kind of leave the trading desks at home or, whatever they like to not do on the computer during August, things kind of die down a bit. And so at the end of this video, I'm going to share a bit of my trading strategies and how I've kind of traded the last few weeks. But make no mistake, myself as well as a whole bunch of other traders have found recently, obviously in August, that trading has been a lot harder and a lot harder to find quality setups and things, whether they be swing trades or day trades, that they can execute successfully without seeing a bunch of fake outs and things like that. So just know that if you are trading right now and you are struggling, you are not alone. It is a bit of a choppy time, but alas, I feel pretty good about September being a really strong month, either up or down, and just overall direction for things. Alrighty. So we're going to take a look at what exactly is going on today here. 1 second. So, bit of a market snapshot. The Dow and the S&P 500 are kind of a bit flat, a little bit up for the week. But consumer confidence is kind of falling, obviously, because of the new Delta variant spread and a whole bunch of lockdown measures. There's, measures to put masks on if you've been indoors now in certain counties, like I think LA and New York. Now you have to wear masks in indoor settings, whether or not you've been vaccinated, which is no fun, of course. But yeah, let's just go over here a little bit. So the University of Michigan Consumer Sentiment Index fell sharply to 70.2 in August from 81.2 the prior month, marking the lowest level since April of 2020, momentarily knocking the wind out of the bullish sales. So consumer sentiment kind of measures, I guess, purchasing habits and obviously, where people are putting their money in stocks. What has performed over the last little bit here is value stocks. So you can kind of see starting around August 6th or so, value stocks have really started to kind of outperform growth stocks, and that's probably a flight to safety. Is people, I think, are not, I'm not alone personally in expecting September to be a bit more volatile. It could be to the upside or it could be to the downside. The question that I kind of have for all this is, we kind of know the biggest, I guess, macro story for the U.S. coming out, and that is the infrastructure bill. There's a whole lot of spending in there. A lot of companies, stand to benefit. The stock market stands to benefit from that. We know that cryptocurrency regulation has kind of tried to be a part of that as well. The question is, we know the bad news, but we're uncertain about how bad it could get. And the question is like, where is the good news? Like, where is, the relief trade coming from? And I think that's what people are kind of looking for next. What is the next big catalyst for going up? The infrastructure bill at this point kind of seems priced in. Where are we kind of going from here? So, so news of a 1.2 infrastructure deal has renewed hope for a solid few years of economic growth and reignited the momentum trade into cyclical stocks. Weakening relative price trends are also apparent when reviewing the performance of the average technology stock as well as semiconductors, often a leading indicator for the sector. I find that as well. It's really important if you're watching the tech sector in general to watch AMD and Nvidia and Micron and some of these semiconductor stocks, because they are basically providing the hearts and the engines for all of these new technology hardware products and software that is built on top of that as well. Conversely, after pulling back, we are seeing improved comparative price trends for some of the cyclical sectors, most notably financials, which we remain overweight. This is the largest sector in the value style, so banks have been doing pretty strong if you've been trading banks and stuff. But yeah, overall, not much going on. And I think the thing to really watch out for, and we'll go over it near the end of the video, is watch for the next big catalyst to kind of really ramp up the VIX, as it is kind of hitting historically low value levels compared to where it was earlier in the year. All throughout 2020, the VIX was above 20, and now it's really, it can't seem to get above 20 to save its life. Today, the VIX is, just grinding down and grinding down. We had a little bit of a pop, I think, end of July. Haven't really moved much since then. It's just been bleeding out as stocks have kind of been going sideways or trickling out. All right, so today we're going to talk about a couple stories. and they're going to be a bit more crypto focused. But the first one is that now that crypto exchanges like Coinbase have gone public, we're getting a bit more insight into how the crypto space is growing. And this is really important if you're long Bitcoin or long Ethereum, is you want to see the numbers correlate with the price as well. So you want to see more users signing up on Coinbase. You want to see more institutions coming in, more money, more inflows and inflows and inflows from every which way. And so some of the things that we learned from the Coinbase earnings are that, number one, they've done fantastically in revenue. They posted, I think, about $2 billion in revenue, up from $178 million in the previous year. So that's about 1,000% quarter-over-quarter gain. And that, that volume and transactions and fees kind of correlates with the price of Bitcoin and Ethereum. They're also up about 1,000% from this time last year. But some of the more interesting stats about this is that 10% now of the top 100 hedge funds in the United States are now Coinbase clients. So institutions are overwhelmingly picking Coinbase. And so I did a video a little bit a while ago on Coinbase and how I thought, how can this business really thrive when the race to fees is kind of going to zero? And the one thing that I said would be a really good sticking point is that if they were able to secure enough institutional clients, those people are unlikely to just bounce between platforms like Fidelity or any other place that offered crypto products. They're going to stick with, their custodian, and they're kind of loyal. They don't like moving things as they miss out on opportunities. When you have to move, hundreds of millions of dollars of capital, you might miss a few days or even weeks of performance. So once they find someone, they like to stick with it, as opposed to the retail user, which will on a whim say, you know what, I'm done with this platform, time to go to FTX or time to go to Binance, right? So institutional growth has actually superseded retail growth. I think institutional growth is up about 1,700% from last year versus retail, which is up about 1,200% from last year. The company had about 8.8 monthly transacting users, which is up from 6.1 million in the March quarter. So almost a 20 to 30% rise in users just from the last quarter. And so we know a large part of that could have been because in May with Doge running in April, that's probably counting some of the numbers in there. We do know that July and August were a bit slower. And so Coinbase adjusted their outlook to say, look, we think that we're going to get around 9 million or so monthly transacting users. We think maybe we could have potentially hit the peak for this year. But as you'll see with Coinbase, with the mining companies, it's very hard to predict where this market is going. It all has to do with the price of Bitcoin. And if the price is up, if the volume is up, the users come in, right? And it usually doesn't really deviate from that. One of the interesting things to note, though, about the earnings with Coinbase, and this is an interesting trend, is that the volume of cryptocurrency traded used to heavily skew towards Bitcoin. Bitcoin used to be the primary asset that everyone traded on these platforms. And now Bitcoin is a much smaller percentage of the revenue makeup for Coinbase. Now, that's not to say that Bitcoin is not important. I don't think Ethereum trading would be such a big deal or altcoin trading would be such a big deal. If Bitcoin was down, I think they would also be down as well. But it's important to note that of total trading volume this quarter, only 24% of it was concentrated in Bitcoin, down from 39% in the first quarter. And in fact, Ethereum actually traded about 26% of all the cryptocurrency volume they had. So there's two parts of that are really interesting. Number one is that Ethereum is now trading more in volume on Coinbase that quarter than Bitcoin was. But the other interesting fact, too, is that even if you combine Bitcoin and Ethereum together, all of the other altcoins combined are now making around 50% of the trading volume on the platform, where around this time last year, it was only around 20 to 25%. And we know, of course, that Coinbase has added a whole bunch of new altcoins, but it goes to show that liquidity is coming out of Bitcoin and Ethereum. It's going into these other ones. And basically what that means is I think it changes the volatility dynamic as well. When people are buying altcoins, they're looking to basically mimic what Bitcoin is doing, but to a higher degree on the upside or to short harder to the downside. And I'm sure you can see these trends on other exchanges as well. So that's just kind of an interesting thing to note. I think one of the things that I look forward to in this space is actually finally seeing some of these cryptocurrencies do their own thing trading-wise. You'll see sometimes that after Bitcoin has had a surge up, it'll go sideways for a few days, and then you'll see kind of these other altcoins pop off. But one of the more things I'm looking forward to is that when Bitcoin goes down, it would be nice to see not every cryptocurrency go down with it. When things were crashing in May, or we had that sideways consolidation in July, kind of everything was doing the same thing, and most things were just doing whatever Bitcoin did, but worse. So it would be nice at some point to finally see some of these assets deviate. And one of the prime examples, I think, of seeing this start to happen is this coin called Axis, AXS. That has gone from, I think, like $5 to $70 in the last month and a half, but it was going up while Bitcoin was going down on certain days. And it kind of has lost most correlation to Bitcoin. And I don't know if that's just because it's a fad. I think it's an NFT type of collectible game project. But it's good to kind of watch out for these other projects in cryptocurrency. And if you're a trader yourself, make note of some of these things, because if people start to notice coins that are trading really well without having to rely on Bitcoin performing well, then it gives you more liquidity and gives you more ability to use your crypto trading capital just when the market's boring overall. So something to look forward to. The next story we'll go on to here is not a company that's public, but something that's still interesting, and that is Reddit's valuation in the private markets jumping to $10 billion. So I'm curious how many people use Reddit here. I assume quite a few people. They're good for news. Obviously, Wall Street Bets was, very a big mainstream moment for everyone to kind of know what Reddit was. But their discussion forum now has had a new financing round. They've raised around, I think, $1.2 billion or $1.6 billion to date, now around a valuation of $10 billion. And so Reddit, like Facebook, like a lot of these other social media platforms, they make their money primarily through advertisements. Of course, one of the things that's a little bit problematic with this is that there's no barrier for watching these advertisements. It's not like an Instagram where you're scrolling through and then these things kind of pop up. They kind of disguise themselves in with a whole bunch of other posts. So if you use Reddit, it's just kind of this big feed, and they kind of disguise themselves in there, but they're not big and flashy like Facebook and Instagram ads are. So their ad business is not gigantic, but it has grown quite a bit. They have made around $100 million in revenue for the first time in the second quarter of 2021, which is a year-on-year rise of 192%, so that's strong for them. And then Twitter, which was founded a year after Reddit, is doing about the same, from about 206 million daily users in the same period. So the thing that I find, my personal take on this is I've probably clicked on one Reddit ad the entire time I've used it. I use it quite a bit on mobile. I'll use it on computer to like post things or to just look at news and find new things. But I would say that in terms of an investment for a stock, I think their advertisements are clearly growing, but I think in order to really see demand for people to advertise on Reddit, they have to change the model in which they're presenting ads to people. And so they've tried to do this by changing their UI and the way that the platform looks to be more like icon-based, sort of like, or big photo-based, sort of like Facebook, but I don't know what the stickiness of that is. But they will be going public probably sometime. There is no firm timeline, but if I was to guess, I would say, like most companies going public this year, you want to pick a good time. Coinbase picked it at the top of the crypto market, and Robinhood picked it seemingly at an interesting time. Their IPO was at $38 and didn't do too well for the first 3 days, but as we discussed before, it's done a lot better now. So yeah, Reddit going public. Curious if you guys are looking to invest in that. I would... I always take a wait-and-see approach to IPOs, but definitely after Robinhood, I'll say that anything that has, kind of been tirade on, I will pay closer attention to rather than IPOs that have been hyped up and everyone's excited for. Robinhood, again, example of one that no one was really looking forward to and people wanted to fail, and alas, it's been one of the best performing IPOs out of all of them in terms of the tech ones. So we're going to wrap this thing up here. We're not going to do a whole bunch of stories today because I want to cover some more technical stuff. Some of you guys in the Discord, if you're not in the Discord, link in the description below, but some of you guys are asking about my trading strategies, and so we'll jump to that. But probably the most interesting story this week, and this is a pretty big story that probably not many people have wrapped their full heads around, but on this cross-chain crypto network called Poly Network, it's one of these platforms sort of like Uniswap or PancakeSwap, but it allows you to do Ethereum, Bitcoin, Matic, all sorts of different assets kind of across chains. A hacker managed to hijack one of the smart contracts on this platform and funnel $600 million of assets into his own wallet. So we'll kind of go over what that looks like here. So, on August 12th, hackers pulled off the biggest ever cryptocurrency heist on Tuesday, stealing more than $600 million in digital coins from token swapping platform Poly Network, only to return nearly all the assets less than 48 hours later. So, a lesser-known name in the world of crypto, lesser-known name, still $600 million in assets, Poly Network is a decentralized finance DeFi platform that facilitates peer-to-peer transactions with a focus on allowing users to transfer or swap tokens across different blockchains. Poly Network was founded by Chinese entrepreneur Da Hongfei, who is currently chief executive of Neo, one of the older cryptocurrency platforms. And according to Neo's website, Poly Network was launched in August last year as a collaboration between Neo, crypto trading platform Switch.io, and blockchain company Ontology. So basically, their platform allows Ethereum users and Binance Smart Chain users to kind of interoperate and exchange assets. If you've used any of these systems, you'll kind of realize that like Ethereum stuff has to be on Ethereum platforms, and you have your own Ethereum wallet. And then if you want to do the Binance stuff, you got to have like a Binance wallet. And some of these things aren't interoperable. And basically, Poly Network was kind of trying to be a hub so that the Binance people could interact with the Ethereum people and so much and so forth, and all the other ones. It's getting kind of crazy. One of the things that kind of makes blockchain a little bit, what's the word I'm looking for? A little bit daunting for people is that there's so many different chains, and if you want to do one thing on one, you might have to convert coins to another, and you got to use a bridge device like an exchange for that. So people are trying to make things that allow the different types of blockchains to be more interoperable with each other. And of course, all these things use smart contracts, but yes, Poly Network tweeted on Tuesday that a preliminary investigation found the hackers exploited a vulnerability in the smart contract. The hacker appeared to override the contract instructions for each of the 3 blockchains and diverted the funds to 3 wallet addresses, digital locations for storing coins. They were later traced and published by Poly Network. And so again, this goes back to this idea that a lot of people have had over the last, forever on cryptocurrency, that cryptocurrencies are so easy to steal and to launder money, and if you want to get away with a crime, go hack a crypto thing and take your money and sell it, or take your crypto and sell it. It's easy as that, but it's not. It really isn't, because basically, as soon as the scene of the crime is discovered, you have all of the people who are vested in these networks calling to arms, what do we do next? And they're publishing the keys to what's going on. All the exchanges, the Coinbases, the Binances, the FTXs are all alerted of the activity, and they're banning transactions from these addresses. The decentralized platforms are now where a lot of these hackers are trying to go to kind of wash their funds. So if you're stealing a whole bunch of cryptocurrency, you're not going to go to Coinbase, they're going to bust you right away. So the attackers stole the funds in about 12 different cryptocurrencies, and they moved these assets into a liquidity pool called Curve.fi. But even they were ahead of them, and the transfer was rejected. And they, in their pool of 600 million, they stole $33 million in USDT Tether, which was frozen by Tether. So, that's 5% of their money frozen almost instantly. And so basically, I'm sure there was a way for the hacker to kind of funnel these funds. They could have sent them to different ways to wash the identity away. Some of these cryptocurrencies like Monero, don't have a trail behind them. But yeah, so the interesting part of this whole story is that after this hack, a couple of hours or days later, the hacker came forward and started using the blockchain to write his own messages about why he did it, and he kind of made his own little Q&A that he answered, and I'll read some out because this is the really weird part to this story, is that in the end the hacker did end up returning almost all these funds, but he was trying to make a statement about the whole thing. Whoops. So I'll scroll up here. Let me just find this here. Cool. So yeah, this is one of the things that he posted, and this was when you do cryptocurrency transactions, you can leave little notes behind, and so he left this. So this is permanently embedded in the blockchain. So why hacking? For fun. Why Poly Network? Cross-chain hacking is hot. Why transferring tokens? To keep it safe. When spotting the bug, I had a mixed feeling. Ask yourself what to do had you facing so much fortune. Asking the project team politely so they can fix it. Ask anyone could be the traitor given 1 billion. I can trust nobody. The only solution I can come up with is saving it in a trusted account while keeping myself anonymous and safe. Now everyone smells a sense of conspiracy. Insider? Not me, but who knows? I take the responsibility to expose the vulnerability before any insiders hiding and exploiting it. So he seemed to think that obviously, this was a difficult hack to pull off, but it was possible that someone within the Poly network could have actually done it themselves and stolen the funds. Why so sophisticated? The Poly network is a decent system. It's one of the most challenging attacks that a hacker can enjoy, and I had to be quick to beat any insiders or hackers. I took it as a bonus challenge. Are you exposed? Does anyone know who you are? No, never. I understood the risk of exposing myself even if I don't do evil. I use temporary email, IP, or so-called fingerprint, which were untraceable. I prefer to stay in the dark and save the world. But here's some more here. What really happened 30 hours ago? Long story. Believe it or not, I was forced to play the game. The Poly network is a sophisticated system. I didn't manage to build a local testing environment. I failed to produce a POC at the beginning. However, the aha moment came just before I was about to give up. After debugging all night, I crafted a single message on the ontology network. I was planning to launch a cool blitzkrieg to take over the 4 networks: Ethereum, Binance Smart Chain, Polygon, and HECO. Haven't heard of that one. However, the HECO network goes wrong. The relayer does not behave like the others. A keeper just recently relayed my exploit directly, and the key was updated to some wrong parameters. It ruined my plan. So I don't know all the technical stuff about this, but some further questions. Why selling and swapping the stablecoins? I was pissed by the Poly team for their initial response. They urged others to blame and hate me before I had any chance to reply. Of course, I knew they were fake DeFi coins, but I didn't take it seriously since I had no plan laundering them. In the meanwhile, depositing the stables could earn some interest to cover potential costs that I have more time to negotiate with the Poly team. So, interesting hacker. In the world of hacking, you would call it like a white hack hacker, basically. But yeah, essentially a couple days later, or a day or two later, the hacker returned all of the funds, and then the Poly network team offered to give him... Oh, am I frozen on the screen here? It looks like I am. Apologies for that. Give me 1 second. There we go. Okay, that should be better. You know what it is? It's getting so hot in here that I think my camera is starting to overheat. So I'll keep a better eye on that so I'm not frozen and you guys aren't watching dead air. But I think my audio was going through at least. But yeah, so the hacker ended up returning 500 or $600 million worth of assets to the Poly network, and then they offered him $500,000 for a bug bounty of finding all these things. So anyway, interesting stuff in the world of cryptocurrency. Really think about that. Like, you know, when you're a hacker, you obviously have some type of ethical quandaries and doing what you're doing. You're jeopardizing users and things like that, or you're attacking a platform or something like that. So when you're a hacker, you kind of have this motivation, you know, whatever it is. Maybe you're extreme, maybe you're like a V for Vendetta type. But it gives you a lot of power to kind of get your voice heard. And so this guy kind of, you know, a bit of a esoteric type of guy in the way that he handled the hacking situation there. What do we learn from this whole situation? I think that's the big question. Well, the big thing that I've been saying with DeFi is that all of these things are so early and so untested. And even the people who audit these things and say, oh, this is safe, and, you know, we've checked the code and all that, they obviously didn't pick this type of thing up, or maybe there was no audit in the Poly network. So the DeFi stuff, you get these crazy good 20, 30, 100, 200% yields. But again, it's at the mercy of hackers who are still messing and figuring out the code for this stuff. Honestly, if I'm going to get interest on something, I don't mind lending it out to a counterparty. I don't mind there being a permission system. By lending anything out, there has to be an acknowledgement of risk. And just because you're decentralizing it, it doesn't take that risk away. And you might think, well, smart contracts can govern these things, but we just know that, you know, we just don't know who's making these things. We don't know how to make sure a smart contract is 100% foolproof. At least when you have a, you know, one person lending out your assets to another person, there's a governable contract there. And I think that is a use case where, you know, blockchain and lending assets might not necessarily be as great on DeFi. So, okay, last thing here. We're going to talk a little bit about some technical analysis. We'll try and wrap it up here pretty quickly. I'll make my face really small. But I had some people in the chat ask me, what is the deal with gold? What is going on with gold? Because obviously, we all know gold as this great inflation hedge. And this is the thing that's supposed to be rip and tail because the money printer is printing money. But not everything is dandy in the world of gold. And in fact, just this week, we saw a fairly sizable dump on gold. So the question is, from a fundamental standpoint, I can only give you my opinion, and my opinion is this. The demand for gold on an industrial scale hasn't really gone up. The industrial demand for every single commodity has gone up. So you're talking about coffee, oil, corn, all these things have done amazingly well. Cattle, all these things have done really well because of inflation, what's going on, and consumer demand, and the lack of ability to be able to produce these things. And even silver has done a lot better than gold because silver is used more industrially than gold is. Only about 20% of all the gold, mined regularly is used for things like electronics. 80% of it ends up going into jewelry or bullion, and even central banks don't seem to care about their gold reserves. So just on a fundamental level, gold maybe not that important anymore, not as much as we think. The other big aspect, and I really think this is true at this point, is that the gold market cap is $10 trillion. And so that basically means if you just look at the entire supply of gold right now, if you had $1 trillion enter the market of gold, that should theoretically mean that the price of gold goes up by 10%. And so right now that would take it from 1770 to around 1930, right? $1 trillion immediately popped in the gold market cap should do that. But we do know that when you talk about money going into something, its market cap, that $1 will move the market cap maybe like $5. There's a ratio there, and so it's obviously more to do with that. So the way that I see it is that the biggest narrative of the last year is that Bitcoin is now this inflation hedge, and we have watched the market cap of Bitcoin and the capital into Bitcoin basically go about $1 trillion in a year, maybe $700 billion. But the whole cryptocurrency space in general has also seen a lot of inflow. And so when you look at all of that fresh capital inflowing, it's not going into gold. The store value of the moment is Bitcoin. That's kind of the thing that people are using. And so I would say if Bitcoin wasn't around right now and there was no digital form of storing value, I think a lot more would have gone into gold, and I think you would have seen gold appreciate a lot more. But there's a changing of the tides. I think younger generations have absolutely no demand for gold, and I think that's another reason that you're not seeing it rip. People aren't buying gold on Robinhood. They tried to do it with silver, and they learned their lesson there. They tried to do a silver squeeze, and I think they popped the price a little bit in January, but it came right back down a minute later. I remember that was a headline for a bit. So when we look at gold on a technical level, here is basically what I see. This week we had a bit of a liquidation event, and I don't know what the news story is behind that, and there's still speculation on that, but essentially one bank seemed to liquidate a large portion of their gold fund, or some big player betting on options on gold got liquidated. And essentially that created a big wick down to 1680 an ounce on gold. And so basically this 1676, 1677, 1680 level is now basically the bottom floor for gold. That shouldn't break, or it's just being tested over and over, and it's not really breaking from there. We've had 3 tests kind of immediately bouncing off of that area. What gold bulls were hoping for way back in September of 2020, or actually, we go back, basically September 2020 into November 2020, was that this was going to be a bull flag. And a bull flag is illustrated by kind of like a vertical move up and a consolidation move that's kind of contained, that doesn't give back more than 30% of the initial move. And so what we saw here was that we had this nice gold pullback to the 12 EMA on the monthly. We got a bit of a bounce in December, a good month in December, but then we just saw it break lower. We got a bounce, but it didn't go up to make new highs, and it broke lower. And so that kind of invalidated the bullish setup, which essentially was this gold bull flag on the monthly. So then what we're left with is, once that was kind of invalidated, we're left with kind of this weekly bearish trend change. And so we're setting weekly lower highs and lower lows. We had a bit of a recovery here from March going into May, but what you never want to see as a bull on something is something take a long time to go up somewhere and then have it all retraced really quickly and then not returning back to the highs quick. We do know that when things are bearish and when there's fear, things like to move a little bit faster, but markets want to kind of, make that look like it never happened, just like the S&P 500 makes the COVID dump look like it never happened. So what are we left with? Well, let's dive into a couple of the closer time frames. On the daily time frame, we're just recovering from this very oversold dump on gold, but consensus would say we're looking for a daily lower high compared to 1830. There's a bit of a double top there, so you want to see that level break. But then we're smack right back at 1900, 1916. And if I was trading this on the daily, I would actually start looking for a short right about now, because even though we've recovered here, I think there is still a bit of damage, and maybe I wouldn't short until we were closer to like 1800, but I wouldn't look bullish at this point anymore unless I saw a bit of a trend change. We're just kind of bouncing right from this liquidation, which I think was probably a bit more of a black swan event. Weekly, we're still basically in a downtrend. We broke lower, but we're not closing under 1750 yet, and I don't think we will, because I think the candle here is closing in about an hour. But that is a weekly bear break with no follow through as of yet. So again, not really that clear. And then the monthly, someone in the chat mentioned it could be a cup and handle on the monthly. I'm not really thinking that at all. And the reason for that is that cup and handles have to not break the previous resistance, pull back, and then break it. We did get a pretty decisive break of the previous all-time high in 1920. So, going from 1920 to 2075, that's about a 4, 5, 6% break of the previous high. And then also, I just don't like the volume. I don't have the volume on the chart, but I think the volume profile would show that, there's declining volume relative to what was going on in 2011. 2011, there was a bit of this panic, I think, with, the market was recovering and people were looking into assets like hard metals and things like that. And you can see this is a bit of a parabolic top that kind of, when this broke the 1500 level, kind of stayed there for a whopping 18, 19 years. My thing is this, I think there's a place for precious metals. If you're building a portfolio, you can definitely, have a place for precious metals, but I don't really see gold as that interesting, honestly. It kind of just feels like a heavyweight. My consensus has always been, look, every single thing has appreciated in value over the last year, except for gold. Gold is basically flat from where it was last year, maybe even down. And obviously you can be picky about time frames, but even 10 years back, we're under where we were in August of 2011. And I know that was a parabolic blow off top, but again, it's just kind of like, it's very odd to have an asset like this basically do nothing for 8, 9, 10 years. For me, the volatility is not there enough. If you're investing in gold miners, that's one thing, but I know in terms of gold mining, it gets harder and harder every single year. There are environmental concerns. I would be bearish gold mining because unless you think the gold reserve is coming back anytime soon, gold miners are just going to be treated poorly by the government because they are big carbon emitters and they're destroying land, and there's kind of ESG stuff that doesn't really comply with that all these sorts of public companies are having to comply with nowadays. And yeah, just wouldn't be too bullish on gold personally. But you know what? I'm not mad at you if you are. I think there's still ways to make money with this. For me, the only way that I see gold being worthy of any time is by playing miners, which are kind of leveraged versions of the gold market, or by playing options. And the thing is it's basically a race against time, because you might have gold miners that do really well, but they could be diluting just to stay afloat because maybe they're not mining at a profit, or they're waiting for a site to get approved. And then the other option is gold options, and then you're subject to all of the intricacies of options. If you buy a strike and the gold doesn't do anything for another 10 years, your strikes are going to expire worthless if they're out of the money. So yeah, that's just kind of my take on it. I want to go over a little bit of my trading strategies, and I'll be perfectly honest, I've not had a fantastic month trading. I've had some good ones with Robinhood, but I gave a lot back the other day trading Moderna. But I'm going to go over 2 trades with you from the other day and how I approach them. And I'm going to go over a trade where I made a lot of money and a trade where I lost a lot of money. So you'll kind of see, what I think I've done that's worked and what I'm trying to actively avoid in my trading style. So mind the messiness for my watch list here. But I have this one called WSB, which is basically a rotating list of tickers that Wall Street Bets is talking about. Not updated daily, but kind of as I see them pop up. And sometimes I have random things in here. So Hood was one that I had a lot of trading success in earlier in August. And basically, it was very similar to what we had going on in January, where we had these stocks just pop and explode. And then we were looking kind of for a big pullback after they blew off, and then a bounce from there. So one of the trades that I had on Robinhood, let me see if I can find it on the chart here, was, so Robinhood on, I believe it was August 4th, opened at $54.39. And basically, as soon as the market started going, it started ripping up. It went to 65, it halted, and it ripped another 17% to 77, it halted, and then it ripped another something at 85, and then it halted, and then it just started dropping and dropping and dropping. So one of my first trades, Dan does this from the chart guys, is this thing called a back burner. And basically, when you see a chart go parabolic and extend really far away from the moving averages, there's a very good chance that when it touches one of the moving averages, it should have an initial bounce. And it might even just bounce and continue higher. And you can strategize to kind of position yourself around the potential of that happening. But at the very least, you're going to be able to buy something near that EMA. And it's usually a very high probability spot to purchase something and then get a bit of a bounce going. So for me, what this was is that I saw Robinhood hit 85, halt, drop on the way down. And then if we just go into a smaller time frame here, I don't even know if I can do this. I'm not good with trading views still. I'm a super amateur, but it is what it is. I still am profitable to some degree. All the way back. You guys in chat, there's like a hotkey to jump to a certain time frame. I'm probably missing that one, but we're almost there, so it's all good. August 4th. And so one of the things too is like I do swing trading, and you can use your technical analysis for that, but I also I really enjoy doing short trades because I like to do all my trades in the morning before 9 o'clock. My trading day starts at 6:30 a.m. here because I'm on the West Coast. So here's basically what I saw with Robinhood. So we had this kind of run up here, and we had all the halts up here, and then we kind of halted on the way down. But the first thing I look for is, okay, this thing just went to $85 and it's ripped, and somebody will want to buy that dip, and they might only want to buy it for a little bit, but someone will. And so what levels are they going to look at? Well, we basically have nothing here. And so when I see a chart go vertical and set no support levels for a very long time, I say, where are we logically going to find support when things top out? And so there's two ways to do this. You can either use an EMA, and I like the EMA 12. That kind of gives me a guide that just seems to work a lot of the time on things, but you can also use the EMA 20 or whatever you like. But I use the EMA 12 to start one of my entries, and I focus on scaling all the way down to the 26 if I have to. However, if my first entry ends up nailing something and it bounces and I make, whatever I make, if it's 1% in a day on my money, that's, I take it and I run. The other thing that I like to use is I like to use Fibonacci's, and so this will give me a retracement, and I basically take what is the highest price that I'm looking at and the lowest price that I'm looking at. So I'm looking at the blow off top as soon as it happened and we started getting these halts to the downside, and the bottom of what was trading from the opening of the day. So the top would be 85, the bottom would be around just 54.40, and I try and find levels. You know what? I did this wrong. It's the other way around. You start on the bottom and work your way up to the top. I basically try and look at some of these levels, and these are Fibonacci numbers that tell me possible areas for bounces. And so the fibs might have not been a fantastic guide for this one because we were halting and popping, and when things reopen, they kind of reopen random places, but it's a really good tool to use when things are kind of normal, as looking for the deepness of pullbacks. If something blows up really quick like this and it pulls back nice and slowly, one of the greatest places to look for bounces sometimes is the 0.382 level, or basically the 0.382 level. If candles don't close under that, that can sometimes mean that it's a potential bull flag. So if, let's just say, we ripped up here and then we consolidated on very low bear volume and we just trickled down at like $73 and started a run up, within a few seconds I would have realized, look, this is a potential bull flag, I'll buy it, and then if we don't end up confirming that, we end up breaking that level and closing under it, I would have taken the loss. But if it's a bull flag and we have a chance of going up through this range, you can sell half of it and then you continue going higher from there. That's another way to play it. I believe what I did for this one is, I'm not going to zoom, or I'm not going to change the time frame because it's going to zoom out, but basically on the 5-minute time frame, this had come down to about the 5-minute EMA 12, and I said, look, this is almost a straight shot down with a couple halts, maybe a 1-minute lower high here, but we just went from 85 to 62, and I'm not even being that ambitious, but I think if we could get like a 4% bounce from here, or a 5% bounce, we can just kind of level out in the next few minutes. I saw a bit of a volume climax here of selling on the 1 minute. If I can squeeze a 1% bounce out of this, I'm looking good. So I ended up buying on one of these candles here, and I said, look, 62.31, if we break, that means that we're still going down, down, down. And we kind of topped out a little bit, set a higher low, went a little bit higher. And so all these numbers you're thinking, well, these are, you know, big numbers. We're going from 62 to 69, and that's, you know, percentage-wise, that's quite a bit. But what I see is when you drop from 65 to 62, a 10% bounce doesn't even take you halfway back up the ladder. It takes you about a third of the way up the ladder. And so I know that when we drop 60% off of a really, really hot name that everyone is talking about, there will be at some point after a 30% pullback, a 10 to 20 to 30% bounce. If I can find a setup where I can confidently capture 1 to 3%, and I can define what my stop loss is, and I can define things like risk to reward and EMAs that I would reject off of, if I can find something like that, and I feel confident about capturing 2%, I allocate a lot of capital towards those moves. And that's just my style of trading. You know, swing trading, obviously a different story. If I was to look at this from a swing trading perspective, I would say, well, first of all, if you bought the IPO, you're doing pretty well. But if we go back, I'm going to find out how to do this. There's a way to go back to a specific time frame. You know what? I'm not going to do it today. But all I know is this, is that Robinhood on the daily, we opened a little bit in the middle of the range after the first IPO day. We broke the low of the IPO day dump, and then we didn't have any follow through. And then basically we had a little bit of a 15-minute trend change. You could have bought a 15-minute higher low, set the low, the stop loss to the low of the day, and just said, look, I'm just not going to have a profit target. I'm just going to let this thing run. I either get stopped out or this thing just goes. And you could have done a couple things. You could have said, okay, look, we're coming back to the 38. Maybe I'll sell a little bit there, or 40. I'll sell a little bit there and then let the rest ride risk-free because my stop loss could, again, just been at the all-time low. So, yeah, there's a couple ways to play these things. That's one of them. But, yeah, I'll go over it. It's so hard to kind of encapsulate all of them. But what I really like to do is I look for high volatility opportunities, and I look for these 20, 30% dumps after big run-ups, and I say, look, this is a back burner. A lot of people wanted this stock 10 minutes ago, and now a lot of people don't want this stock. But we know that the tables are still there for the bulls. So when something runs up 70, 80% in a day and it drops 30%, we know there's still people who think this thing can go higher and they're going to buy dips. And so when you zoom into certain time frames, you can notice these people and you can notice the trends kind of changing very temporarily. And so you'll get these 10 to 20% bounces. And if you can just capture a sliver of that, you're doing really well. The problem is these opportunities, they don't pop up every single day. Hood was an exception. I made almost all my August profits, and I gave them all back in the next trade, which we'll go over here. I'll try not to go too long. This is actually a longer video, but it's about trading, so that's cool. So this is a example of this technique not working, where you see a stock really, really hot, and then it just dumps. And you think, oh, well, it was really hot like a day or two ago. There's got to be dip buyers, right? So I'd never played Moderna that much before this, and I thought we just broke, we've been ripping from 214 to 500 all-time highs. Had a bit of a weaker day beforehand, and we dumped really, really hard here on the 11th of August. And my idea was, look at this daily EMA 12 acting as support through all of these little things. We'll have little dips under it, but we'll always consistently bounce off it. We have good reactions, and kind of held it as support. So one of my insights here was, okay, we are dropping from $500. We opened at $450 on August 11th, and then we just dumped all day. And so what I was looking for was, when is this going to end, right? And I was thinking, okay, I'm watching all these candles drop, drop, drop. I get really interested on stocks, especially the ones I don't know. When the RSIs start to go below 20, that shows extreme dumping. And so, my first entry here on Moderna was like 403, and I say, look, I'm willing to scale down to 390. But here's the thing, is if we don't even get a 5-minute trend change, I got to cut it on the next low. And so I basically, added all the way down here. I go a little bit off, because I said, look, when things are really weak like this, the EMAs do the opposite of the strength thing. They become resistance. So I took a little bit off here at 402, and then we went lower. I stopped out, and then we kept going lower. I just kind of watched the chart for a little bit, and then I said, look, we're going sideways here, and if we break over one of these resistances, 389.79, we set a little 2-minute trend change here. Maybe we can go up. We broke it by, I think a penny, or maybe not, maybe, sorry, this is the wrong look here. One of these we broke a resistance by a hair and we got no follow through. Trying to figure out which one it was. Oh, maybe not. Maybe I'm just stupid. Well, this is a good example where basically we bounced, we dumped, we broke we made a lower low, and then we bounced and we broke the 2-minute resistance here, and we made a little bit of a higher high here over the 2-minute EMA, but then we just dumped all the way down again. So that's called a megaphone pattern, where basically there's no clear trend. We're just setting, lower highs, lower lows, higher highs, and then lower lows again, kind of like that. These are really tough patterns to trade. But essentially my whole point is this, is that I was looking the wrong way on this. I was trying to play a bounce because I looked at the daily chart and I thought, look, this is going to bounce off the daily EMA 12. I thought, look, 390, good level. There was some 4-hour support at 394. And basically, it just didn't materialize that entire day. The thing that I missed, the thing that I really missed, is that if I had just done the exact opposite of what I was trying to do all day long, and that would be to play short, I would have been so much better. If I looked at this massive dump here on the 2-minute time frame on August 11th, and I said, look, why don't I short this on the first bounce of the 2-minute EMA? I could have, first of all, captured some profit immediately down here, because it immediately, on the first bounce from 453, 426, a little bounce here, rejected off the 2-minute EMA 12. I could have said, look, I'm going to short this because the momentum is bearish today. This is a very bearish open, a lot of bear candles in a row. I could have taken some profit on a short here. Watch this play out a little bit. Maybe my short stop, if I set it really tight at 43.30, could have been poked out. We went a couple pennies higher, but what I like to do with stop losses is if I've locked in some, I try and kind of have my stop losses a bit looser. I could have had a bit of a looser stop loss after taking half profit here after this initial winning trade, and I could have just let this ride, and I might have covered it a little bit when it got oversold, but being in puts or just being short this stock 424 to 400 in just a matter of like half an hour, you're looking at 5, and that's just, the key is just identifying trends. And so the tricky thing is that to most people, you would say, look, we're ready for a 4-hour higher low, because we're pulling back here and we should be bouncing maybe on one of these and continuing upwards, or making a little bounce here and then going lower. But we just blitzkrieged right through all the EMA supports there. So when that happens, it isn't always the most likely thing to happen, but when that happens, you have to realize when your edge is losing. And if you keep doing the same trade over and over, you do the same thing 3 times and you keep getting stopped out, that's when it's time to think, okay, what if I just put it the other direction? What if I did that instead? Would that have been the easy trade? And if it was, don't go out and take it immediately, but think to yourself, maybe in the future, if I see something like this happening, if I see some pattern and it's not going my way, what if I just took the opposite side of that trade? What would that look like? Where would have I entered if I was looking this way instead? And so that helps you give perspective on things that don't go quite your way sometimes. So in all seriousness, I did this trade. I lost a lot of money for that day, but we're working on making it back bit by bit. But just some small trading advice for people. This does not include crypto. Crypto is its own magical fairy beast. I just buy it and hold it forever because you know me. But if you are trading stocks, I find most of the volatility is in the first 2 hours and the last hour. The number one time where I lose money, it's under 2 conditions. One, it's when the VIX is under 20, because I'm constantly looking for really volatile stocks that I've probably never played before because the main ones just aren't doing anything. Or I just start playing options because I'm like, oh, Amazon's really boring or Tesla's really boring. Maybe I can capture an equilibrium here or there. I just lose money because you're trading things out of desperation at that point. The number 2 thing is that almost all of my bad trades aside from those have come in the middle of the day because I'm buying when volume's drying up during lunchtime. So if you're on the East Coast, I would say that is basically between 12 p.m. to 3 p.m. And if you're on the West Coast, like I am, it'd be like 9 a.m. to about 12 p.m., maybe even 11:30 a.m. or something like that. Just don't trade in the middle of the day if you're doing quick scalps because there usually isn't anything there unless there's news or something. But again, first hour is the one that you're really looking for. I find, you'll usually get a confirmed trend in the first hour. So if something rips after open, you look for the first 2-minute higher low, and then you hope for a higher high because usually, a trend is set pretty early on in the day, and opposite if you're looking bearish. But yeah, that's everything for today. I'll see what you guys wrote here really quick. Thanks for tuning in. I hope some of that trading advice made sense. More spending, more inflation, Bitcoin rising. Yes, but it's not all about that. I think it's also about adoption. I don't think Bitcoin only goes up because there is inflation. I think people like Bitcoin because it also solves problems outside inflation, like, you know, money transfers and things like that. And I don't know, people just like the network, you know. But yeah, inflation is a big part of it for sure. Lack of trust. Bitcoin is a trust vehicle that people are using for sure. When will Ethereum consolidate? Never, and you'll never get an entry, and you should feel bad that you didn't buy it like 10 days ago. I'm kidding, but it does seem to go up a lot. I know that a lot of people are saying it's because of this new supply restriction. People are staking, people are using it more. I'm pretty bullish on Ethereum. I think it's, you know, doing well. I maybe doubted it a little bit in the past. I haven't maybe talked about it that much on the channel, but you know, that's how I got my start. So look for deals on it though. When things just grind up and just go up constantly, it's really hard to get entries for a longer term. What I just say is just dollar cost average. If you feel like you missed it, you haven't. You can just buy a little bit every day until you get your position, and you'll get some type of average price that won't be buying the top. Channel needs more Makiko. I agree. Makiko should come in here with a bunny at some point. Gold, yeah, not a cup of handle on the monthly. I will ask Lamont about doing TradingView, because I've been using TradingView for 5 years now, and I don't use it. Here's the thing. Dan was talking about this when it comes to trading too, is like, you don't want to mess with your groove when you're in it. One of the things is like, when I trade primarily in Questrade, I still use the web browser client. I don't even use IQ Edge, because I tried it for a couple days and I just couldn't get my head around it during trading hours. And I said, look, I'm not going to do anything to endanger my edge. So I know that it's silly to use, you know, IQ forever, but or the web client forever, but it just works for me. So why mess with it? And Dan was saying he bought a new laptop like 6 months ago, and he hasn't opened it to start using it for trading because his old one's working fine. He's had this like 6-month winning streak. Why endanger it, right? So yeah, that's that. But yeah, thanks guys for watching. I'm going to try and change the format a little bit next week. We'll do something a little bit quicker here, because I know that you guys are, you know, fine watching me ramble. There's a good percentage of you that don't mind watching me ramble forever. But I want to tighten it up a little bit so you can get all your news and go on the rest of your day, because I know, you know, Fridays are kind of busy times for people and they don't want to spend an hour watching me ramble. You can do that anytime. But I'll try and get something more concise for you guys and cover a few more stories as well. Maybe not super deep, but get you a bit more of the headlines that you're looking for so you don't have to browse Reddit and stuff like that. Thanks so much for watching. Take care. I hope you guys have an awesome weekend, and I hope the wildfires clear if they are where you are. I certainly hope they do here. Take care.